Can we flip $20 to $100 and the broker that gives up to 100% bonus? This is what I want to try out, because most brokers promises fast execution and rewards, but in reality we see slippage, delays, widespread and hidden terms and conditions. So when this broker, Market For You, contacted me to try their platform and share my honest opinion, I agreed, but only if I could test out everything. So I'm going to go ahead and deposit my own money, take live trades, check out their bonus to see if it really works, and even request a withdrawal just to see if they actually deliver on their promise. And in this video, I'll walk you through the full process, how to create and fund your account, the bonus system, is it really good or just a gimmick, my live trading experience, and how fast they actually pay when I request a withdrawal. And yes, everything I don't like about the broker, I'm going to also state it in this video, because no broker is perfect and there are a few issues you should be aware of before signing up, especially if you are trading with a small account. One bad entry or delayed execution can ruin the trade. That said, I will also show you a simple trading strategy I used to grow small accounts really quick, including the compounding formula I follow to scale up fast that you can apply on any trade with this broker or even any other broker. So step one is to sign up, but many looking at the websites, they've been here for over 18 years, 3 million accounts, 1.3 billion orders executed, and they used to be Forex For You before they became Market For You. I would say their interface looks aesthetic. So I'm going to go ahead and click on create account. So sign up is pretty straightforward. Enter your email address and select a password and enter the confirmation code that will be sent to your email. So we are in. If you have any issues, you can always contact customer support by calling or chat them up by clicking here. But the first thing we can do now is to just click on verify our profile. Once we are done verifying our profile, the next thing we're going to do is to go ahead and fund our account. I actually already have an account with Market For You, so I'm just going to open my account to show you. There are 5 deposit methods available. So we have a Naira, Crypto, Skrill, Neteller, and a Wallet. The minimum deposit varies: 3,000 Naira for Naira, $10 for Crypto and Wallet, $1 for Skrill, and $2 for Neteller. For this test, I will deposit using both Naira and Crypto to see how both of them work. Now, one thing to note is the method you make a deposit with is the same method you are going to use to withdraw, at least for the amount you deposited. This is one way brokers use to prevent their platform from being used for money laundering. So make sure the method you want to use in withdrawing is a method you're going to use to make the deposit. Now, during the deposit process, you're able to see an option to select a deposit bonus up to 100%. And here is how the deposit works. When you make a deposit, you can choose a bonus, again, up to 100%. But this is not a cashback for you to withdraw immediately. It is credit added to your account and you cannot touch it until you meet some trading conditions. And this is it. As you trade, a part of the spread and commission you pay is returned to you, and this will continue until the total amount matches the bonus you are giving. Once it's complete, the bonus becomes real money in your account to withdraw or trade with. You can have up to 5 bonus seats active at once, but you must complete the volume target within 3 months the bonus was created, or the bonus is cancelled. The bonus amount you qualify for depends on your account type and leverage. So we're going to go back to the dashboard so I show you the different accounts. You can see here I already have 4 accounts, but I want to add another account. I just have to click on add account. There are 3 types of accounts. One is Send Pro. In my opinion, this is best for absolute beginners with small capital. The second one is Standard Classic. It's good for intermediate traders who wants no commission, and then we have Classic Pro, which is best for experienced traders who trades large volume and wants tight spread. Now, these accounts are available for both MT4 and MT5, depending on where you want to trade. And the good part is that you can have all these accounts under one login, because from what you can see here, I already have like 4 accounts. So I'm going to go ahead and create the classic standard account on MT5. In my own opinion, I think it's best for claiming bonuses since there's no commission and all the fees are built into the spread. When creating the account, you can choose the leverage you want, and the leverage determines how much bonus you receive. So you have leverage from 10 to 4,000. This is how the leverage affects the bonus you receive. If you choose the leverage from 10 to 500x, you'll get up to 100% bonus. Leverage of 1,000 gets you 50% bonus, and leverage from 2,000 upwards can give you up to 25% bonus. So I'm going to select leverage of this 1 to 500, and I'll go ahead and click on create account. Now, if you want people to copy your trades, you just have to check this so that when you trade, people can copy your trades. This is for master traders. If you're a pro trader and want to make extra money, this is where you do that. So I'll go ahead and click on create account. So this is it. My account has been created. This is the information here, which I'll use on MT5, but it has also been sent to my email. I can get it from my email as well. So now that it's created, I'll go ahead and click on deposit. Let us try the Naira deposit here. The account I'm depositing into is this one I just created, and type of deposit, let's say internet banking, and we'll select it and click on continue. So let's deposit 100,000 Naira here. And so have up to 50% bonus. I'm going to click on 50% to get all the bonus. I'll receive 65.21 USD, and I'll click on continue. Now, it is important that you make the transfer from your own bank account. So I have made the payment. So immediately I made the transfer, you can see it says success. I meant to receive $65. It says here your deposit will be processed shortly. Please note it may take up to 24 hours. If I go back to dashboard, it has already been deposited. So I have $65.21 plus the bonus I was given. That is why it is now $97.82. So the deposits, it's actually instant. But let's try it for crypto because I do a lot of my deposits and withdrawal in crypto. Let's see how crypto works here. So I'm going to go ahead and click on deposit again, and I'm going to select the same account and choose cryptocurrencies. So these are the different service providers depending on the network you want to deposit through. I think the network with the lowest fee is BEP20. So I'm going to do either this or this. But let's try this crypto provider 3, and I will make a deposit of $100 to see. So $100. Now, because I already used my deposit bonus once for this account, it's not showing me deposit bonus again. So try to make it under 1. So I'll click on continue, and this is going to show me how to make the deposit. So this didn't work. The deposit 3 option, I'm going to go back. That is why they have several options. If one doesn't work, try the other one. So the crypto provider 2 is what I'm going to use now. And I'm going to click on continue. The same thing. $100. Click on continue. Then I'm going to confirm, continue, and I want to do US Theta. That is USDT. Network banner smart chain, continue. So I have gone ahead to make deposit to this wallet address. I'm going to click on I have paid. Well, crypto network takes a few seconds. Say wait 10 to 15 minutes. So let me just wait a little. Make sure you also pay within this time that is counting down. This is 1 hour. So this is done. It took about 5 minutes, but the Naira deposit was like instant, showing that Naira deposits are faster. So if I go to my dashboard, you can see now I have $165, which is $107 if I add the bonus I received in this account when making the first deposit. So now, how do you place a trade when you have this? Is to connect your MT5 account. Remember that when we created this, it was MT5. So I'm going to go to my App Store or Play Store, whichever one you use, and download the MT5. MetaTrader 5. You can see I already have it. Just click on open. Then I'm going to go to settings, and if you did it for the first time, you see get started, but then I want to click on new account, and I'm going to go ahead and search the name of the server. If you remember the login and password we were given when we created this account, you copy it, but if you check your email, you can also see it in your email. What I'm going to do first is to look at the server name. This is eGlobal Trade Classic MT5. So I'll search for eGlobal. This is it. So what we're going to do is to, here where it says server, we're going to click on it and enter Global Trade Classic. Then we'll now go ahead and copy our login, paste it here, and the password we are given. Mind you, you can actually change this password if you want. And that is it. So you can see here that balance is $165, equity, all of them, and credit is $32. So we now have our account here. So let's test out how easy it is to place trade. I want to place trade on Euro USD. So I will click here and I will search for Euro USD. So this is it. So Euro USD. I'm going to click on it and click on trade. Now I've not done any analysis, but let us test it with the minimum lot size, which is 0.1. I just go ahead and click any buy or sell to see how fast it goes. Once we click on it, our order is executed. So the trade executed really fast. And if I want to close it, I want to tap and hold on the trade and click on close position. Again, the execution is fast. Overall, if you're someone who scalps, fast execution like this really matters. And in this case, Market For You handles it well. Now, before I get into the cons and test the withdrawal process, let me show you a strategy you can actually use to enter trades properly. This is a strategy to use to quickly flip $20 to $100 or even $100 to $500 really quickly. It is a two-part approach. One, a simple technical analysis strategy to determine your entry and your exit. Two, a daily compounding strategy to grow your account fast. Now, the daily compounding strategy is quite risky for beginners because we're going to be risking 23% of our account size on each trade. Ideally, as a beginner, you should not risk more than 1% of your account size. But in this case, we're trying to grow small accounts really fast. So again, this is a small account strategy. You don't want to use this on a large account. However, it doesn't mean we're not going to apply proper risk management in our trades. So let's start with the daily compounding strategy. Again, we are risking 23% of our account size. The idea is this. If we get 5 consecutive winning trades with a risk reward ratio of 2, we can grow $20 to $103. If we get 10 consecutive winning trades, we can grow the same $20 to $880. Now, let us be honest. 10 winning trades in a row is really, really hard. Even 5 trades in a row winning, it's tough. But let's first of all look at the theory, then we can look at how to make this a reality. For this sheet you see here, I have linked it in the description of this video for you to make a copy and test out a different value to see how it works. All you have to update is this white cell, like where I had 20 and all this place. That is where you can put in values. This is how this sheet works. You enter your capital. In this case, I have $20 here. When you enter it, you can see how much risk for each trade. In this case, we're having $23 as risk. This risk percentage is, the amount is $4.6. My target profit is 2R, which is 46%, double, that is double this, which is 9.2. This is the actual profit I'm going to make, and this is where I enter the value. So in this case, I entered 9.2. Let's say I entered 12, for example. Let's say I did a 3R. You can see that my actual profit now is 69% and my end balance is $34, which now becomes my starting balance. Let's take it back to where it was before. if I'm able to achieve this 2R, on the 5th trade, I will now have $133 as capital. Like I said, it is not easy to get 5 to 10 consecutive wins, but it is easier to achieve 3 consecutive wins. 3 consecutive wins is achievable. Now, knowing this, to achieve even a better result with this, we target a higher risk-reward ratio. For example, if you have 3 consecutive wins at a risk-reward ratio of 3R, it will give us $97. In other words, we have $20 turned to $97. And if you have 5 consecutive wins at a risk-reward of 3, it's giving us $276 from $20. This is more achievable, right, compared to 5 or 10 winning streaks. Now, let me show you the strategy I use to actually hit this kind of trades, how to calculate your loss side properly, and how fast market for your withdrawal works. For this strategy, there are 4 key things you need to understand, and I will explain them quickly. One is market structure, fair value gap, Fibonacci level, and the stochastic RSI. Let's use this market. So this is a trade that I actually took today, but we'll come back to that. But let's start with the market structure. Market structure is simple. There are 3 types of market structure. We have the uptrending market, which makes higher highs and higher lows. And in each case, what happens is that we always have a break of structure. This is the last price, and the structure was broken. It's another swing point, and the structure was broken. This is an uptrending market. And a downtrending market is the opposite of it. This is what you need to understand. It's not that difficult. It's just the opposite of this. So we have the market moving down this way, and in each case, we're having a break of structure to the downside. Pretty simple. Then we have a ranging market. In this case, the market is making equal highs and equal lows. So it's going sideways. It's not really giving us a clear trend. Now, we're not interested in this market. For this strategy, we are only interested in the uptrending or the downtrending market. And our aim is just to catch trades at this point, catch this trade at this point, or in this case, when a structure is broken, we want to catch trade at this point. It's as simple as this. So let me go back to the charts and start from the 4 hours. So this is AUD/JPY on a 4-hour time frame. Can we identify the market structure? In this case, you can see it here is clearly uptrending. Why? Because it has that element of break of structure. So we have a structure here. This structure is broken. The price movement upward went past this swing point. So it's broken to the upside. If I take this higher, so here again, market is broken to the upside. Here is break of structure. Again, we have break of structure this way. Then we made an equal high here. Then finally again, we had a break of structure here, and so on and so forth. So this market is characterized by higher highs and higher lows. So it is an uptrending market. So the next thing we want to look at is a fair value gap. Let's look at this. So this trending market is made up of 2 types of movements: the impulsive move that broke structure and the retracement move. So impulsive move, broke structure, retracement move. Impulsive move, retracement, impulsive, like that. So this is the movement of the uptrending market. Now, what I want us to look at is this. Anytime we have an impulsive move, we should look for what is called a fair value gap. Example is this particular candle that we see here. So we have this candle, let's call it candle A, candle B, and candle C. You can see there's a gap in the wick between candle A and candle C. If you look at this one, this particular one, so this candle A, B, and C, this candle, there's no gap here. If you look at this particular candle A, B, C, the wick of this one, candle A, touches the wick of candle C, so there's no gap here. So when there's a gap, we'll call it a fair value gap. In this case, we have this movement upward, leaving a fair value gap, but this black candle coming down has actually filled this fair value gap. This becomes invalid. Now, in the second movement upward, we saw this impulsive move, and it has a fair value gap here. I'm just going to go ahead and mark it out. So there's a gap between here and here. This forms the fair value gap. So that's another thing we look at for in this candle movement. If you look at this particular one, there's a tiny fair value gap here between here and here in this impulsive move. So whenever there's an impulsive move, we look for the fair value gap. That's another thing we'll look at. Now, how do we trade this? It is really simple. If we have an impulsive move, like you see this one, so this particular move, the one that led to the fair value gap, broke this structure. Let me show you what I mean. It's a tiny structure inside this place that was broken by it, because this is the top of this last candle. Then it left a fair value gap. What we'll now do next is to pull our Fibonacci tool, take it from this bottom, take it all the way to the top here before the candle start coming down. And when you draw it and extend it, we're looking at this zone called the 6-2. It's called the golden zone. When this candle comes back into this zone, taking this fair value gap, we'll look for trade here. And how do we confirm this trade? We'll confirm this trade when the stochastic RSI, this is the blue line, comes back into the 20 zone. So what we're going to do here is to draw our risk reward ratio 2 long position. We'll place it here with targets around this midpoint, and we'll go for at least a risk reward ratio of 2R. So if we target only this point, it gives us a risk reward ratio of 2.3, and we can even target the next target, which is this one, giving us a risk reward ratio of 3R. You can see this trade perfectly made this. Let's take more examples. And to even refine our trade, we can go down even to a lower time frame. Mind you, I'm on the 4-hour time frame. I can go lower to refine this trade. Now, let's look at another one. So we'll see a broker structure this way, which is this one that is coming from here. So this candle broke through. So we pull our Fibonacci from here to this particular point. We got an entry here, even though we don't have a confirmation for the stochastic RSI. Therefore, we can actually leave this particular one, right? Unless we are trading on the lower time frame. Then you look at this one again. The next one, there's a breakout. This led to a breakout structure, but this didn't come down to our Fibonacci golden zone, so we're going to leave it. The same thing applies from this particular point. I will usually don't trade this because this fair value gap is not yet filled. I'm going to take it from down here and take it all the way up. This didn't get to our golden zone, but so we're not going to take this trade. If you look at this next one, we have a series of fair value gap here, here, and even here. And it broke structured this way. So this is valid for us to draw our Fibonacci. If we take it from the bottom here and take it all the way up and extend it this way, all we have to now wait is for our stochastic RSI, the blue line, to go back into this zone. Once it starts going back into the zone, this is where we enter the trade, and we can go ahead and pull our risk reward ratio tool here. So if we enter this trade at this point and we target the last swing, and when we target here, just here, is giving us a risk reward of 3.73. And if we target the next zone, which it even got to, it gives us a risk reward ratio of 5. And if we target the next profit point, it's giving us a risk reward ratio of 6.4. So it's pretty simple. And the next one is the same thing. I can keep going doing this over and over again. If I pick this tool, take it from this bottom, or I can even take it from here, since this is the last swing without a fair value gap, and take it all the way to the top here and extend it this way. You can also see, because we have a breakout structure here, that this is a point for us to take this trade. Now there's another point here that we could take the trade, but you can see that when the market came down here and the Fibonacci gave us a confirmation, this hasn't gotten to the golden zone. And when it got to the golden zone, we're already inside here. So this is not valid. But if you wait, you can see this came down and came down to past our golden zone. And if Fibonacci gave us a confirmation, this is our entry. If we do the same thing, draw our risk reward ratio from here, target this place because we're just filling the fair value gap and go all the way to our first TP. Is giving us a risk reward ratio of this. This wasn't hit on time, it finally got hit here. But even if it hit it here, you are still getting a risk reward ratio of 3. So this is a simple way to just trade this strategy. Now, for example, when you want to enter this particular trade, this here is my entry 192.57, and here is my stop loss, which is 191, and you can see that here is risk reward ratio of 3. So how do you enter this particular trade? What I would do is to pull out my Forex calculator. I'll click on instrument and select GBP, JPY, which is this, and my account balance is $20 and I'm risking 23%, which is 4.6. You can see it here. And my entry, if I was taking this particular trade, is 192.574, and my stop loss is 191.338. I'll go ahead and click on calculate. So this standard lot of 0.0054 is what I'm going to impute into market for you. This ensures that if I lose this trade, I will only lose $4.6, and when I win, I'm going to win 4.6 times 3, which is a risk reward ratio of this particular trade setup. I can go on and on with this. It is really, really simple. So this is it. This gives you a clean, simple way to find high probability trades, whether you are trading with a market for you or you have any other broker you're trading with. Now let's test the withdrawal from market for you, which is what is left. So I'm going to go ahead and make a withdrawal really quick. So I want to make a 100,000 naira withdrawal. I want to click here and withdraw because I made 100,000 naira in naira. So type, I'm going to internet banking. So $65 is going to give me 99,000 naira. So I'll go ahead and click on continue. Then enter my bank details. So this empty password, this is the password that was sent to us when we created this account. So confirm and proceed. 8383. So the withdrawal was instant. I have received the money, 99,184. It was just instant. Even though they said it's going to take up 24 hours, but it was just done instantly. So market for you, deposit and withdrawal through bank is instant. So this is it. Overall, market for you offers solid trading conditions, tight spread, low commission, low trading costs, and even a swap-free account, which is a big win if you're trying to grow a small account. But when I tried the copy trading feature, I ran into a few issues. Some things weren't clear. For example, I received email that my account wasn't copying the trader. I had to keep adjusting my account, not really knowing what the issue was. So if you are a beginner, it could be a bit frustrating. And even funding the copy trading wallet was slightly confusing for me at first. But once you do it a few times, you get a hang of it. And to their credit, when I contacted customer support, they did reply me really quickly. But I didn't follow up after that because I mostly trade manually and don't rely on copy trading. I later actually found out that the reason my trades weren't copied was because I was copying with the wrong amount. And that is why I kept getting stopped out after my first trade. So in my view, I feel Market For You needs to do a proper step-by-step video showing exactly how the copy trading works, because the video on their copy trading homepage just didn't cut it for me, especially when I had issues. That said, if you're patient enough to go through the learning curve, copy trading on Market For You could still be worth exploring, especially if you don't have the time or experience to trade manually. Once it's properly set, it can be a hands-off way to learn while you earn from experienced traders. Now, you've seen how Market For You works, from account setup to deposits, bonuses, trading, the strategy, and even withdrawal process. You've also seen both the strength and the flaw of the broker. And most importantly, you've learned a practical strategy you can use to grow a small account, whether or not you use the broker. If you want to use Market For You, I've dropped the link in the description of this video. And if you are serious about learning how to trade and grow your accounts the right way with strategy, tools, and the community, then make sure you subscribe to this channel, because in the next video, I'm breaking down another powerful trading setup, step by step and more detailed, on how to enter and exit trade like a sniper using candlestick, structure, and confluence.